looking like it's heading towards a crash. The sky does seem like it's falling. So I went to investing.com to see what the deal is and why the whole market's red. US consumer confidence deteriorated for a third straight month in February, and the latest sign that American households are fretting over the effect tariffs and inflation could have on the path ahead for the wider economy. Everything is red. Well, almost everything. There is one ETF that's nice and green while everything else is red and crashing super hard. That would be SCHD, and it's actually up about 2%, where almost everything else is falling, which is why I suggest that you invest in that 3-fund portfolio to keep your portfolio nice and safe and balanced and have a very solid balanced approach. SCHD is a very solid defense for when tech stocks or the high growth stuff does start to take a decline, and that's what we're seeing right now. Palantir's down about 30% on reports that the government's going to cut spending, and also that the CEO and other executives have been selling a massive amount of shares. The S&P 500 overall is down over 2.65% in the past couple days.
Which I've been telling you this for a while. If this is causing fear, just get ready. Get your big boy pants, because I know no girls watch this channel. Get your big boy pants, because it's going to get ugly when fear starts really taking the market. Like it, I think we've gotten so complacent that the first 10%, 5%, 7%, 10% pullback we see might be some of the ugliest market moves you've ever seen.
QQQM, the NASDAQ 100 ETF, is down almost 5% in that same period. Bitcoin has dropped a massive 10% and is all the way down under $90,000. As I've said numerous times in my videos and in my Patreon group and just to whoever will listen, the tech sector at some point is going to hit a slump, and there's going to be a portion of time where it just has to stop growing as fast as it's been growing, let everything else catch up, and during that time, the tech sector is going to drop. You can see here.
Hey, wait, did he just describe the market cycle? Did he just describe specifically this that we talk about all the time? Hang on, let me rewind.
Point is going to hit a slump, and there's going to be a portion of time where it just has to stop growing in that same period. Bitcoin has dropped a massive 10% and is all the way down under $90,000. As I've said numerous times in my videos and in my Patreon group and just to whoever will listen, the tech sector at some point is going to hit a slump, and there's going to be a portion of time where it just has to stop growing as fast as it's been growing, let everything else catch up, and during that time, the tech sector is going to drop. You can see here that the unwinding of the AI trade is weighing even on the broad market, but specifically hurting the NASDAQ the most since that has the most exposure to the tech world.
On the Echo, I see y'all's comments on that. I had to turn his volume up really high. So what you're hearing is my speakers going through my microphone and then back out. So I've turned it down, and hopefully that'll resolve it.
My name is Nolan Govea. My students call me Professor G, and I made this channel to make investing simplified. So what's going on, and why are we seeing such panic? And even more, how should we invest this year?
Oh, dude, like if we're seeing panic now, this terrifies me for what's going to happen if there is a real pullback.
In the bond market, Treasury yields pulled back as investors herded into investments that are generally seen as safer when prospects for the US economy look rockier. They've been swinging sharply since President Donald Trump's election amid uncertainties about how policies on tariffs, immigration, and taxes could affect the global economy. Trump has antagonized US trading partners recently, threatening to raise tariffs and inviting them to retaliate with import taxes of their own. Trump said Monday that tariff hikes on imports from Canada and Mexico will move ahead after a 1-month delay. Now, that one is a big one. Financial markets hate uncertainty. They can deal with a plan, even if the plan looks a little bit negative, or at least we can at least see what is supposed to happen. But when it's uncertain, when all we're doing is sitting here going, well, if this happens, then this might happen, or if this happens, this could happen, that's the worst thing for the stock market, and that's what we're seeing today, because investors are fickle. When we don't know what's going to happen and we're waiting on the edge of our seats, any little piece of information that even looks a little bit like bad news scares investors out of their positions, and then that in turn scares even more investors out of their positions. Well, the stock market has been selling hard lately. Wall Street is falling again Tuesday as US households get more pessimistic about the economy because of inflation, tariffs, and other policies coming from Washington. The US stock market has been sinking since the middle of last week after several weaker than expected reports on the economy thudded onto Wall Street. On Tuesday, the latest report said confidence among US consumers is falling by more than economists expected. But I did some digging and I have some thoughts on this. Let's hear what Tom Lee had to say in this short clip, which is actually very interesting. And then I'll give you my insights and further what to actually do with your investing.
Is that
so far I have nothing to complain about. I like Professor G. I think he's very grounded. I think he's very logical. We may have a little bit of differences in our style of trading and investing, but so far I got no issues here. I think he's doing a great job. Jay the Gremlin asks, can you apply outliers to ETFs? Oh yeah, for sure. Check it out. Over here in Outlier, just straight up on the watch list right here, I've set 3 ETFs as my favorites that are just the markets. And you can click this little button here. It'll show you all the sector ETFs. And then you can actually see which ETFs are getting buy signals or sell signals each day. We have 5 new buy signals on these ETFs, and we have 2 new sell signals on these ETFs. So that was a good question. I want to interrupt real quick and add that.
The market has eluded extended periods of weakness because investors are bearish at the highs at a time when there's record cash on the sidelines. So to us, this is a market that is very skeptical of these new highs. That bearishness and concerns about tariffs means there's a wall of worry. So I think this is actually a very positive.
Hey, the wall of worry. Climbing the wall of worry. Tom Lee knows.
Setup for stocks.
So you're not concerned about some of the data we've gotten? I mean, that University of Michigan consumer sentiment reading this morning in particular seems to have spooked investors, given the fact that it cited broad declines across age, income, wealth groups. You also said that big spike in year-ahead inflation expectations, that was unchanged, but the 5-year expectations moved higher too. At what point does that start to manifest into something more meaningful in terms of a slowdown here in growth?
Inflation expectation surveys matter to the Fed because they are concerned about whether or not consumers are actually raising their inflation expectations, and that would in fact be bad. But we have to keep in mind the UMH surveys do seem to be polluted by political affiliation. When you break down respondents by Democratic responses, they've gone from seeing inflation under 2% before the election to over 5% today. Republican respondents have gone from 4% to basically 0. In fact, if you look at the distribution of responses for those Democratic respondents, almost 7% think inflation is currently at 25%. So I think that there is a lot of pollution.
So why are we listening to these people if they don't actually have a grasp on what inflation is, and they're so blinded by their political party? Why do we care what they have to say?
That data, and I think it's probably pretty typical what happens when there is a change in administration. But I hope the Fed is aware of that political dynamic.
So basically, a lot of the issues that we're seeing in the market right now are all stemming from emotions. People are selling off like crazy because it's like dominoes. One piece of bad news gets a certain group of investors spooked, and then they sell. Then another piece.
He's describing this. He's describing how the market works. He's describing trend following right there.
Piece of bad news comes out, and that gets even more investors spooked, and then they sell. Then these other investors see that a stock's down 3% or 5% because people have been selling, and so then they sell. And then all these sells are now triggering stop losses.
He's exactly describing how the market works. What do you know? It's so refreshing to find someone on YouTube who gets it. To find someone who understands this is how the market works.
For other people, when they didn't even actually want to sell out of the stock, they just had that set there. And so all these triggers are happening, and so all these sales are happening, and it looks like everybody's selling out of the market. It's really just one big emotional overreaction and chain reaction. Every year there's a reason for the stock market to fail, or for us to have the biggest recession of our lifetime, or for us as investors to definitely get out of the stock market and wait until this passes. This graphic from the Market Hustle said it best. In 2015, the reason not to invest would have been the global stock sell-off. Then the huge issues surrounding Brexit in 2016.
Okay, this is really funny. This is good receipts.
Then major hurricanes in 2017. Then the trade war in 2018. Then the repo market blowing up in 2019. In 2020 was that little thing called COVID-19. In 2021, there was a supply chain crisis, and then rate hikes in 2022. Then huge bank failures in 2023, and the AI bubble fears last year in 2024. Now in 2025, there's fears over the tariffs. But just look at this. In that period, those 10 years, the S&P
Okay. I'm digging this video.
500 has returned 202.8%. Block out the noise. Listen to what Tom Lee says here about the current and
that's what I tell you guys all the time, right? I have a trading plan. And I hope by at this point you have a trading plan too. My trading plan tells me when to get in based on the market. It tells me where to get out based on what's happening with the stock, and it tells me what my position size needs to be. It tells me everything I'd want to know. And if it doesn't fall into this plan, if it doesn't fall right out the bottom of that funnel right there, I don't care. It's noise. It means nothing to me. I'm not even interested in looking at it. So Professor G gets it.
Expected turbulence at these levels, and actually something that's going to help the market, and it should make the market skyrocket very soon. Then I'll explain what we should be doing as investors in these climates.
It certainly seems like it. I mean, I think investors can cite a lot of things top of mind why short term they're expecting the turbulence. You know, we're coming off 2 back-to-back 20% years. We know there's significant uncertainty about tariffs. In our latest client survey, 63% of our clients, and that's over almost 2,000 respondents, said tariffs or deportations is the biggest risk. That's up from 54% last month. But these are not things that have necessarily long-term negative effects. In fact, things like the number of Fed cuts is actually back towards 2. And I think there's a possibility the Fed may actually make cuts sooner. I think one thing the market is being complacent on is thinking the Fed's on hold. But if this turbulence causes hiring to slow, I actually think the Fed could actually be making cuts a lot sooner, which would be positive for stocks.
So here's the thing, everything surrounding that uncertainty that I talked about from before. All of this is what if. If you're a long-term investor and you don't need the money like in the next couple months or even in the next couple of years, then all of this should just be disregarded and just looked at as noise. If the market continues to drop and continues to correct from the unsustainable track that it was on, this should excite you as an investor. It definitely excites me as an investor. If your whole goal is to put money into the market and let it work for you and grow to much bigger than it is today, then you want to buy in at lower prices. The stock market's the only place where people can—
Hold on, Professor G. I know you know. I know that you know that I know that you know. Right. Something that's going down can go down for ages. And if you want to get in at lower prices, by all means do so. Like AMD, I always like to point out AMD because there's so many people on the internet screaming something similar to
AMD, you gotta buy as many as you can. AMD, as soon as it goes down, I'm gonna buy more.
Like a caveman. But the point is that as it's going down, let it go down by all means, and then let the outlier trend template tell you when the going down has stopped and when the going up has started. And that's when the 10 is over the 20 and price is over the 50. And when it goes that direction, that's your opportunity to get in. Now, let's say, for example, you wanted to buy AMD, but you saw it was 150 and you were like, oh, I'll get in when it goes lower, and then 140. And then if you were a smart investor, you would say, wait a minute, I'm going to wait until it stops going down at 140. And then it got down to 130. And you're like, well, you know what? 130 is a great price too, but I'm not going to get in here because I know that this dip hasn't proven itself to have stopped yet. And then it went down to 120 and you're like, well, good thing I didn't get in at 150 or 140 or 130. And then it gets down to 110 and you're like, okay, sweet. I've been listening to this Chris guy for a while and he's been telling me for ages, you know, this dip can keep on dipping for as long as it wants to. And if I just apply the outlier trend template, then I'll know on the opposite end when it's going back up, because I was cool buying it at 150. I was cool at 140, 130, 120, 110. And now at 104, I don't know if it can go up from here, but I do know one thing, that the trend is currently down. And when only price pays, we have to wait until that price stops going down and does something like this. Where is this tool? And does something like this, where it figures out its bottom and then starts coming back up. And then, you know what? Lo and behold, I can get back in at 120. Professor G knows this. Please don't tell me to buy the dips, because this dip can keep on dipping for a long, long, long time. And he just described how the market works a whole lot. So surely he's not going to say buy the dip until it starts going back up. Let's see.
Complain about getting cheaper prices. The S&P 500 is not any worse of an index than it was a couple of days ago, but now you just get it at a cheaper price at 2.5 to 3% on sale. That's just a deal. If you've done your research and you
Hang on. Surely he didn't just do that.
just get it at a cheaper price. The stock market's the only place where people complain about getting cheaper prices.
He lost the plot.
S&P 500 is not any worse of an index than it was a couple of days ago, but now you just get it at a cheaper price at 2.5 to 3% on sale. That's just a deal. If you've done your research and you believe in the company or ETF that you're holding, and you also have an emergency fund.
Hold on. This is something that I think a lot of people in the market get really skewed by. They do their research and they believe in the company, and they believe in the company all the way down to bankruptcy, like Tattooed Chef. They believe in the company all the way down to bankruptcy, like AMC. They're not in bankruptcy yet, but they believe in the company all the way down. Like there's so many examples of believing in a company as much as you can, and that company's not going to come anywhere close. Here's the other thing, right? You can love a company. You can love a company. You can think this is the greatest company of all time. I think Tesla's a great company. I love my car. But the stock is saying it's not a great stock to own right now. And that's okay. That is so okay. You go over to Tesla chart and you look at it and you're like, wow, that is a very obvious stage 4 downtrend. I may love the company, but I don't love where the stock is going. So I don't have to hold it anymore. And maybe when that outlier trend template points the other direction, maybe when that happens, I'll be interested. But until that point, I'm going to let it go on down as far as it wants to go, and I'm not going to be involved with it.
Built up and you have very, very low debt or no debt, then this shouldn't worry you at all. Yes, it's not fun to look at your investing portfolio and see that it's down a couple percent or a couple hundred.
Oh, damn it. I really wanted to like this video. So Brett says, Professor G's strategy is all about long-term hold. Be that as it may. Be that as it may. If price is going down, Professor G's strategy is not working, right? If price is going down, there's nowhere to go. There's nowhere to hide. You're losing money day after day, right? And if it's a long-term perspective, fine. Follow one long-term moving average, maybe just the 50-day moving average, okay? There will be times where you make a couple bucks going over and under, right? You make a couple bucks, you lose a couple bucks. It's part of the game. But when the big move is there, you can capture, like here's one right here, you can capture a 57% gain. And even better, you don't have to take a 25% loss and watch those profits evaporate, right? When I hear somebody throw the excuse, and I'm not saying, Brett, that you have an excuse. My opinion is, if you say you're a long-term investor, that is an excuse to say, I'm cool with losing money. I'm cool with losing money, and maybe one day I'll hope and pray that the stock comes back. That's what I hear. But what I need to hear is, only price pays. Oh, I think I heard that wrong. Only price pays. That's what I need to hear. Because at the end of the day, if price is going down, if you open your portfolio and you see red, 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 green, red, red, green, green, you've done something wrong. You've done something incredibly wrong. Short term, long term, doesn't matter, because you're only going to get paid when the stock price goes up. That is a fact. Now, I know you're probably thinking, because I get this comment all the time, well, what about tax consequences, Chris? If you're such a smart guy, what about taxes? Yeah, bro, wouldn't you rather pay, let's just use round numbers here. Wouldn't you rather pay 20% of the gains you made? Let's use Tesla as an example. Let's say you bought it at right here, 286, and you got out here at 375. So let's say you had a $90 gain, okay? A $90 gain. That's awesome. And you might have to pay 20% taxes, right? Times 0.2. So you paid $18 in taxes. Your net take home, 90 minus 18, 72 bucks. Okay. Would you rather have that $72 net gain after taxes? Or would you rather have no gain because you tried to avoid taxes? If this light bulb didn't go on for you right now, I need you to rewind and understand what I'm saying here. If you are not selling because you're afraid to pay taxes, you are losing money. You're not paying taxes on the entirety of your portfolio. You're paying taxes on only your capital gains, okay? And capital gains is generally less than your regular take-home pay. Not only that, but if your investment goes down and you're losing money, now you don't have to worry about paying taxes because your original investment is worth less. Boy, I sure would love to have that $72 net gain versus no gain versus having less money in my account than when I started. There is no point whatsoever, in my opinion, to not move, to not take off a trade because of tax reasons or because you're a long-term investor. You need to be as defensive as you possibly can in this market, right? I say this all the time. You heard me say it this morning. Every stock is a bad stock. Every stock is a bad stock, but every once in a while they act right. And when every stock is a bad stock and you have that mentality that they act right every once in a while, you'll understand that there is no sense in holding a stock that's going down. No sense. Natalia says, being a long-term in a stock is risky. Being long-term in a world ETF is a great strategy. It can be, as long as the price is going up, my friend.
$100 or a couple $1,000s, but this is short-term thinking, and what we're investing for is long-term. Now, if you absolutely do need that money in the next couple of months, then you definitely want to do what I've told you to do all along, which is get that money out of the market and have it in something stable like a high yield savings account or something. If you absolutely need the money in 3 months, it's not a smart move to gamble because there is a chance that the market could drop, like we've been seeing. But right now the market is down, it's correcting. It hasn't hit a crash yet. It still has a long way to go to be considered a crash. A crash is about 20% of a drop, and we're nowhere near that yet. I'm not saying that.
No, nowhere near that yet. And if we see that, oh man, it's going to be the worst, biggest, scariest bear market you've ever seen. But as outliers, we're going to be making bank all day long going short. Real quick, let me introduce myself. My name is Christopher Yulev. I've twice been awarded top 100 people in finance. I was mentored by 5 of the market wizards, some of them who claim to be long-term investors. And you know what? They're the best traders of all time. I've been successfully trading since 2009, and this is where we save time, make money, and start winning with less risk together as a team. Now, I want you to rank this video. Throw it in the chat. Avid, probably should have been David. Either way, Avid, I appreciate you there naming it exactly on the head. Every stock is a 7. Every single stock is a 7. Every once in a while, they act right. Every stock is a 7. Gainer's Point finally caught alive. Now, subscribe if you haven't already, by the way. Let's rank this video here. Let me take a little screen grab of the thumbnail. And here's the deal. I like Professor G, so I'm not going to be rough on him. And he knows that only price pays. So where are you going to put it? 4.5s, 3s, 8.25. Solid 6, 4, 6-ish, 5. The professor is one of the most grounded YouTubers. I enjoy him a lot. I don't think there's anything wrong with what he's saying, but I think that just burying your head in the sand is a strategy for failure. Hey, Donna. Donna's one of our oldies as well. Glad you made it. Long timer. Dr. G usually talks about 3-part portfolio ETF and holding. A debate with him would be good. You know what? I would love that. I'd love that. Okay, so I think the consensus here is, damn it, Hannes. I know you were fishing for that. Nobody gets a 7. I know you're fishing for that. I'm gonna throw it as a 6 as well. I would say it's decent. I'd say for somebody who never ever wants to look at the stock market, just throw your money in an index fund and go away is basically what we're getting at here. So I'm gonna throw that in there. Oh, you know what? Actually, I forgot to update it from this morning's video with the absolute worst. It's not even close. Good God. This is the worst video of all time. I would give it a negative value. The replay of that will come out here at the top of the hour. You do not want to miss that because somebody in I think it was Nate in the Discord said that I nearly blew a gasket. So speaking of Discord, let's go to today's member highlight over in the Discord. Okay, so a couple things I wanted to talk about. Let me find it. Okay, so DJ was talking about Charles Schwab denied him an options account, and he's only allowed to trade covered calls. He needs many years of experience. How are you supposed to get experience if you can't, right? Here's the thing. A lot of options brokers, they want to do their due diligence, right? If you go through and you click the boxes and says, I've never traded options before, I've traded options for 0 to 10 years or whatever, right? Nobody's going to background check that. You do you. You can click whatever boxes you want. You do you. I've gone through this a handful of times. I would say go to a different broker that specializes in options, not necessarily one that specializes in, like retirement funds. Charles Schwab may not be the right place for options. I used Tasty Trade for years. I currently am using Tradier. There's all kinds of options for you out there. I would definitely say don't let that get you down. There's so many other things that you could look at. And for sure. So there's going to be a broker out there that is going to take care of you. Maybe even a Robinhood would work. Then let's go over to the share your big wins. And Jorge, I think that's Jorge here in the chat, says, I've been green for 10 straight days. That's so cool. Today I closed my SPY position, same day, with the 585 puts with a 60% gain. He started his account with $250 and is now at $1,500 in the last week. Bro, you're killing it. You are absolutely killing it. But I want to take 2 seconds. Jorge. That elation, that excitement that you're feeling right now. We talked a couple days ago about trading psychology. There's the boom and bust cycle, especially for someone who's new. What you're doing right now is awesome. But what I want to make sure you do is continue to have your trading plan and follow that trading plan, right? That beginner's luck feeling that you're feeling right now is awesome. And I want that to continue for the rest of time for you. And the way that will help you for the rest of time is making sure you have a solid plan and you follow your rules in that plan. Elsewise, you may be going through that boom bust cycle that I personally went through and most traders do. So congratulations, Jorge. Just please make sure that you take care of yourself. Inkari says, been looking at options and struggling with it, but it's paper, so hoping I can make lots of good mistakes to learn from. Yeah. Get a paper trading account and just go crazy. I spent 6 months paper trading options before I felt comfortable with them. Go crazy learning in a paper trading account. And then by the time you get done 6 months later, you're going to be so much further ahead than most people out there. So be sure you share your stories in the Discord. And the first row of Outlier is you tell everyone about Outlier and you hit the like button. That way everybody else knows about it too. Now back to trading in the Outlier trading room. And we will be looking at the trades we had today. What is Outlier and what does it work? Well, old Uncle Warren would say, be fearful when others are greedy and greedy when others are fearful. Outlier shows you when investors are acting irrationally fearful or greedy and by how much, allowing you to get into the stock before the outlier move happens. And you can get into the annual pass for 64% off. That's literally 82 cents a day over at outlier.com. And if you're already taking a monthly trial, let us know. Shoot us an email and we'll upgrade you from there. But my style of trading using Outlier, I call it the golden ticket trading strategy, and only price pays. So let's take a look at the market and let's start there. So first, let's go to the SPY. Oh, somebody said it. Tesla looks exactly like a market cycle. Copy and paste. Yes. Isn't that crazy? Arthur, the fact that you can acknowledge that and you can see it now, doesn't that make you feel like Superman? Doesn't that make you feel like Batman, right? That you have knowledge that 90% of people have no idea what you're talking about. If you said Tesla's in a stage 4 downtrend, they'd be like, what are you talking about? And you'd be like, well, let me show you. And it's exactly that. Yeah, well done. Dude, clickbait, let's go. That's how the game is played. So the SPY, back over to here. The circles are closest under the 20-period moving average, which is my get out of Dodge card, okay? Now, we have the 10 is under the 20, price is under the 50. Right now, this is for sure, hands down, no doubt whatsoever, mathematically, a bearish trend. Trends change all the time, so don't think that I'm calling for a crash. Don't think that I'm saying that this is going to zero. I'm saying, as of right now, which is all we can trade on, we can't see the right-hand side of the chart. Unfortunately, it's blocked until tomorrow. This is a bearish trend, right? So because of that, let's go on to the next page, which is not that page. Hang on. Here, market breadth. What does market breadth look like? How many stocks are showing buy signals? How many stocks are showing sell signals? We go over here and we see this. Right, market breadth has been getting weaker and weaker and weaker for a while now, since January 27th. So for me, that's what I want to see if I want to start going short. I have the master key, says a sell signal on the SPY, which we have. Sell signal on the SPY came February 13th. The market trend is bearish. Market breadth is bearish. And nearly all the sectors have bearish breadth as well. There's a couple that are bullish, but that's okay. We're not going to worry about them right now. The reason we're not going to worry about them is because I already checked it out. Now, here's the next thing. For those of you who have never seen me trade before, and it's most of you, I've made 2,000 videos on YouTube before you ever heard who I was, okay? None of this has changed. There have been refinements here and there, but none of this has changed. The first thing you do is look to reduce risk before adding new trades. Meaning, if I have existing trades on, what am I going to do with those trades? Am I going to keep them? Am I going to take them off? Am I going to adjust some stops? Whatever, right? But I need you to know that there are no expectations for the trade. There are no expectations for the outcome of this trade. I don't know if it's going to win or lose. I'm not having an expectation here. There are no profit targets on this trade. I will let it run as far as it can until one of my exit signals hit. And this is just a plan to get out when one of these things happens. And as I mentioned earlier, sitting on your hands is a really hard thing to do. So we're going to look at a handful of items here. It's going to go quick. It's going to go quick. So I'm only in IBN with long puts. Now, yesterday I bought in at 28.20. Today it's sitting at 28.14, right? It's not breaking the half ATR, which is my stop loss. It's not breaking the 10 EMA, which I also would use as a trailing stop. So neither of these are the case here. I don't see any order blocks on the daily chart, so no issues there. And the outlier heat map, let's double check that. And you go to one of them real quick. This is IBN. So the outlier heat map is representative of how fearful or greedy people are. And in this case, I want more people getting fearful of this. I really want people getting more fearful of this. So what we're going to do is we're going to measure how fearful people are and if they're getting more fearful or less fearful. So as of today, or as of yesterday, when we put it on, it was at R11. Today, it is at R12. You can see the value right over here, R11 and R12. Now, also keep in mind, for the financial sector, we're seeing the greed evaporate heading towards fear. I had a conversation with Mark and Mahesh earlier, and the reason that I did not enter the U.S. Investing Championship this year is because I feel like we're going to find something out during the year that will make our strategy even better. And I'm on the case of this right here, the constituent heat map. So this is how the stocks within that sector, are they getting more fearful or are they getting more greedy? It's like fear and greed breadth, if you want to think about it. And so for me, this is something that I'm exploring right now. I might introduce this into here, but it's something I'm noticing. So anyway, the heat map went from R11 to R12. So it's continuing to get more greedy. I'm sorry, more fearful. And it did not stall. And then we haven't rolled the option yet. We can, but we're not to that point just yet in the future. So I entered when it was at R11, which I just mentioned. So I'm giving it a 9-point spread on that heat map. So 11 plus 9 would be a sell at R20. So when I say sell into strength, it's sell into strength on the so I should say sell into weakness at R20. You're an ass. Heat map went up, less bearish? No, heat map went down. Right, R12 is a greater value than R11. So because it went from R11 to R12, it goes from 0 to 50. So that means the heat map is moving in the direction we want it to see. So Jorn's been around with us for a long, long time. So I don't have a reason to close this trade. Right, I have a couple dollars of open profits, and that's okay. But I don't have any reason to take it off. So I'll let it sit. I'll let it work. So the next step is to run the scanner. Now, the scanner came back with absolutely nothing for me today. When I put in my criteria, literally nothing. February 25th, that was yesterday, were some of these sell signals that came through. And the only one that I took was IBN. So I actually am not going to pursue this any further because I don't have a reason to. Right? We talked about earlier, if a stock doesn't set up in your trading plan, not mine, stock doesn't set up in your trading plan, there's no reason to keep on going. So I'm going to stop there. What I would like you to do, though, as you know, put it in the chat. What stocks do you want to take a look at? We'll take a look at them for a few minutes before the market closes. TPG Lunds. Hey, Chris, finally caught you live. Thanks for the advice on getting out of buy the dip stocks. Save me from Monkey Hammer a couple times in the last week. You are welcome, my friend. Nico says, this looks like an awesome oscillator. We should call it the awesome oscillator. But yeah, I think that I haven't built it in the trading plan yet. I haven't started back testing it yet, but I'm so good at identifying patterns. Like that's a thing that I can do. Like, I'm really, really good at identifying patterns. And I'm noticing that when the constituent heat map is getting less greedy, while the heat map of that stock itself is getting less greedy, that seems to be a really strong correlation. Really strong correlation. And why? Because 40% of a stock's move is due to the market. Which direction is the market going? That's 40% of what's happening. What's happening in the sector is 30%. So the market's 40%. The sector, the movements in the sector are 30%. So 70% of the stock's movement has nothing to do with the stock itself. Only the last 30% of the stock's movement is the stock itself. So if you've got the market forces pulling it down on the market and the sector forces pulling it down on the sector, and then it's weak with the sell signal, I think we got a real recipe here. Harold, app, I would appreciate that as well. Let's take a look together, my friend. APP. Not quite as good as OPP. Oh no, do we not cover APP? There it is. Nope, we don't. And that's okay. We cover 2,500 stocks, and APP happens to not be one of them. But that list is growing all the time. Ooh, yikes. Okay. So APP was moving up, had a small trend, but it definitely was a trend, moving up. At no point in this trend did it ever close under the 10 EMA. No point. And then it popped up on earnings. Who knows what I'm about to say? Throw it in the chat. Throw it in the chat. I give you 3 days after earnings to find out what's going on. This one took 5 days. What happened to this? Looks like a gap and crap. Dustin nailed it. Dustin got it first. This is what a gap and crap looks like, unfortunately. Celsius is also what a gap and crap looks like. And that's why I say give it 3 candles. That's why I say give it 3 candles. But let's go back to APP. Yeah, the first close under the 10, that would have been my exit signal. Would have been at 416. It's down at, oh my gosh, it's down at 332. Bro, this one is really brutal. This one is definitely the monkey hammer of the day. Yikes. Yeah, I'm sorry about that, Harold. This one is just not beautiful at all. But we can learn from it, right? We can learn from things like this. What's a couple of notes that we can take away from this, right? Trading into earnings can be really fun, really exciting, and actually can be very lucrative, right? Not once during this time did it close under the 10 moving average. So I've told you many times before. I like to trade up into earnings. I don't like to trade earnings. Now, had you held it, okay, Harold said he's just observing. Okay, cool. I hate to say, Harold, here's the thing. I'd hate to say this stock is awful when it's something you own, right? I would hate to say that. But to that point, it moved up on earnings, and then it took 5 days to come back down, but that is a gap and crap, no doubt whatsoever. But what we can learn from this is trading up into earnings can be great. Hitting earnings, it's a crapshoot if it's going to work, but a close under the 10 is always an indicator of the short-term trend. And that short-term trend can last a couple days, or it can do something like this. So Harold, thank you so much for that one. Jean-Louis with the shorts, VLO. All right, VLO on Jean-Louis. Oh, I've traded this one at some point. When did I trade? Oh, crap, I just messed up my notes. I was going to say, when did I trade this? I'll have to remove it anyway. Okay. VLO short. We got 10 under 20, price under the 50. Let's go VLO. And okay, we got the sell signal on VLO. Harold says, I took your advice early. I'm in cash and happily currently. Appreciate you, my friend. No, Harold, I appreciate you, dude. Thank you so much for following up with that so I could hear the whole story. I really appreciate that. Okay, so if we're looking at VLO, we got the sell signal. It's been kind of bouncing up, sideways since that sell signal there. The heat map shows a value of G2 and G2 for the heat map sector. Well, that was weird. The heat map for the sector is moving down. So this seems like it has some legs to it. I don't think we've seen the real move just yet. That's what I think. Now, if it closes under this order block, it's gone. Goodbye, that order block. The next order block is down here on 124.42. Look, if I can take $5 out of the market here and there, I'll take it. So I like that setup, Sean Louis. Nice. Okay, Kleptomaniac said he was out of app at 485. Nice work. Spyros, IBM gapped and crapped and then bounced again. Let's go look at IBM. Well, I wouldn't say necessarily that it gapped and crapped. I would say whatever the low is on that first move up candle, I would say that is where you would determine if it breaks through there, right? Like look at the difference between Celsius, right? The low on that gap up candle. And then we can go back to APP. Right, when it breaks that low, I think that's the real definition of the gap and crap. But let's go back to, I've totally spaced out. What stock was that? Come here, recently viewed. IBM, sorry. So not quite, it got close, but it definitely did bounce right back up. And looks like it might have closed right under that 10 EMA. And here's the thing, right? This is a great example of just using one moving average. Close under, close over, another close under, right? You could have made a couple bucks here and there doing that, right? That's just how the market's played. But this one, I mean, it shows a lot of resiliency, It's closed under the 10 right now. The market's pushing down. Let's go to the IBM here, and I want to look at the heat map here. John, is there a video about the screener? Absolutely. If you want to go to the Outlier YouTube channel, we have a whole playlist on every single section. Oh, actually, I'll tell you what. I believe we might even have it here. Is it here? No, a lot of our tutorial videos are right here on the screen, like on the dashboard, these little icons right here. That'll take you to the
bull and bear list are simply.
But you can go over to the YouTube channel. And you can go to our playlist. And you can go to Outlier Tutorials. And then you can see market breadth, behavioral heat map, constituent heat map, up and downtrend indicators, performance summary, Discord, screener. Dude, like I recorded all of these. So we got everything you'd want to know right there on the YouTubes. So let's go over to 3 months on IBM. Wow, look at the greed on this. So greed, the values go from G0 to 50 and R0 to 50. It peaked at 46. It did get a sell signal just yesterday on IBM. I would be taking that sell signal personally. You've got the tech sector really falling off, starting to go into fear. And you got this one that is so far. When I look at the heat map, I always look at it like a rubber band. You've heard me say this before. When it gets really far, it's like a rubber band stretching and it can snap back really, really quick. So me personally, I would be taking my profits on IBM today. Brian, Nvidia, the dark horse of the room. What is going to happen with Nvidia earnings? Okay, in the earnings, I want you to type a U if you think Nvidia is going to go up on earnings, or a D if you think Nvidia is going to go down on earnings. I would love to get y'all's feedback on that. Okay, so at the moment, it's been really, really sideways. Like this is one of those times I'll tell you, you might make a buck or lose a buck following the outlier trend template. But as of right now, right 7 minutes before the market closes, technically it's a sideways trend because it looks like the 10 and 20 aren't exactly crossed. They might be right at each other. But I would give you the benefit of the doubt and say it's a bearish trend. You've got an order block on both sides, so who knows where that's going to go. And I have no idea. I'm like this, Shane. I'm like, I don't know. First off, I wouldn't trade it. Second off, we got lots of D's, we got U's. This is cool to see, right? And this is how the market works. We have two different opinions of what's going to happen, and that's how it works, right? You've got buyers, you've got sellers, but at the same point, you can't say a stock is overvalued or undervalued because if somebody's buying it right here, it's a perfect market value for them. TP, I need to make a better YouTube username. Was wondering, when you buy a long option instead of a stock, I know you buy deep in the money, but what time frame, what delta are you aiming for? Got you, Tom. Check this out. I got you so much. I do this every day. This is my job. Literally my job. Where is this at? Here. Roughly 80 delta. And I look at 21 days to expiration. I'm good to go a little earlier. I'm good to go a little later, but that's my ballpark. That's where I start at. I like 250 or more open interest. I don't look at volume. I have found volume extremely unreliable, so I only look at open interest. And a 50-cent or less bid-ask spread with a 20% or less extrinsic value. And 9 out of 10 times, that's hitting right at 80 delta. 9 out of 10 times, it's right there. All right. Joseph has diamond hands on Nvidia. We'll see how that goes. Joseph, I have diamond hands on nothing. Only my wife's hands has diamonds. I don't have any. I have the most paperist hands of all time. We've got a couple eyes. What is eye? So very cool. Lots of ups, lots of downs. I love to hear that. We'll do two more charts. Throw it in there real quick. Two more charts. The first person I see come through. Oh, Golden Oldie says, I have inside info on the earnings. Wait a minute. Did you call up Nancy? So Golden Oldie was like,
Nancy. Hey, Nancy. Nancy, you there? And she's like, oh, hey, Golden Oldie. What's going on? And Golden Oldie was like, is Nvidia going up or down?
sorry, my Beavis and Butthead impersonation was coming out right there.
I have inside information. Can you confirm this? And she's like, no, well, actually, I think it's going to go up. And he's like, no, I had inside information. It's going to go down. And she's like, oh, you called me. I told you it's going to go up. Bye.
I had somebody in the comments say they want more Nancy calls. So we'll throw some Nancy calls around here and there. Okay. Lolly. LLLY. Lloyd's. Oh, that was weird. Hang on. LLOY. I don't have that one. Is that an American stock? There she is. Okay, we'll do CRM. We'll do CRM and HESM. I think that was one I did over the weekend. Let's do that one real quick, and then we'll do CRM. All right, HESM. So 10, 20, 50. Not a beautiful trend to start with. Still has a lot of strength right here. But, I mean, I'm not looking to hold stocks forever. I'm looking to hold stocks as long as they work. And then if they don't work, I get out. So this one, if this was the one that I'm thinking that it was, that I did over the weekend, it just didn't work out, and that's okay. Or was it BXSM? I think it was BXSM. Oh, clearly, I don't know which one it was. I forget. There was CRM. Ooh, CRM is rough. CRM is looking really low. It's got earnings too. But yeah, your 10, 20, 50 is all pointing south. Tree Fitty. Kolb short. COLB. COLB. Yeah, that COLB short looks pretty sharp. I like that. It was BXSL. I thought it was BXSL. Did I type it in wrong? No, there it goes. Ooh, okay. No. This is one I talked about the other day, and I said where I would get in and where I get out. This is why I have this plan, my friends. You wonder how Chris makes money in the market. It's because Chris isn't trying to hold forever. Chris is trying to take the gains while the gains are there. And then when one of these things pops up that says, hey, now's the time to get out, Chris goes, I think now's the time to get out. And then I get out and I avoid things like this. Like, because that, my friends, is a big ass monkey hammer, a big old monkey hammer right there. But you don't have to trade that, right? You follow the 10 EMA or you get out when the heat map goes to a certain value. You're golden. Do I look at IV when trading options? Holy moly. Don't get me started on that. Don't get me started on that, Francis. Don't get me started on that, Francis. At one point in my life, yes. Now, I would recommend you go watch the video that's going to pop up here in 2 minutes when it goes to air, because I kind of went hog wild on that. I didn't specifically talk about IV, but no, I don't look at it. I'm only looking at the option value. If the value is right. When I say the value, when I mean if it has my criteria is right here and the stock is set up, I don't really care what the premium is. I don't, because I'm only going to pay at the most 20% of it. Is there a secret Nvidia earnings party? No. Peter says, Peter from the Netherlands, the trend is your friend. After what period will it be your friend? 3 months, 6 months? As long as the trend is trending, that's how long it is your friend, my friend. Hey, I do want to point this out there. If you're an influencer of any size in any niche, we want to work with you. send us an email over at support@outlier.com. And of course, tell me what you're trading in the chat. Be sure to come back tomorrow to help you save time, make money, and start winning with less risk together as a team. YouTube is going to pop up a couple recommended videos. I recommend you watch one of those, especially if it's the one I'm thinking of that's going to air here in about 60 seconds. Have a fantastic day, and we'll talk soon.